Hey guys, this is the video about using infinite banking and velocity banking together successfully in 2026 and beyond. Let's go. You've probably heard people talk about velocity banking, maybe even infinite banking, but here's what almost no one tells you. The real magic isn't in picking one, it's combining both of them. Because when you do it right, you can pay off debt in record time, you can build your own private bank that never stops compounding, and you can start investing like the 1%, all without earning $1 more than you do right now. The problem is most people try to piece this together from random videos or spreadsheets and end up frustrated when the math doesn't add up. So let's clear that up once and for all. Hey, I'm Adam Carroll. I'm founder of the Shred Method. I've spent years helping homeowners pay off their mortgages faster, free up liquidity, and use tools like a HELOC to unlock real wealth building opportunities. And in this video, I'm going to show you exactly how to combine velocity banking and infinite banking into one simple step-by-step strategy that actually works in 2026 and beyond. This is a strategy that banks would rather you never learn, because once you understand how to make your money move faster, you'll never look at debt, savings, or investing the same way again. The origin story. To really understand why this strategy works, you've got to know where these two ideas came from, because neither of them started on YouTube or in some online finance group. Velocity banking actually started in Australia. Homeowners there found a clever way to use their home equity line of credit, or HELOC, to save on interest. Only they called it a sweep account. Instead of letting their paycheck sit in a checking account, earning nothing, they park it inside that sweep account. And since the sweep account, or HELOC, works like a big revolving account, every dollar sitting there instantly lowered the loan balance. And that meant you pay less interest every single day. Then when bills came due, they would pull the money back out of that sweep account to pay them. So the money was always working in the background, shrinking the overall loan instead of sitting idle. Over time, that small change would shave off years of payments and save tens of thousands of dollars in interest without anyone needing to make more money or live on less. The idea is it changed their behavior, the way their money flowed through the system. The idea crossed over to the US when a man named Harsh Gill wrote a book called How to Own Your Home Years Sooner and Retire Debt-Free. That book quietly spread through real estate and mortgage circles and helped people see that you don't have to follow the bank's 30-year playbook to own your home. Infinite banking, on the other hand, comes from R. Nelson Nash, who wrote a book called Becoming Your Own Banker. His core idea was simple but powerful. Instead of relying on traditional banks, you could use an overfunded whole life insurance policy as your own private bank. It's a place to store cash safely, earn guaranteed growth and dividends, and you could borrow against your money whenever you need it, all while it keeps compounding in the background. And this is where it all connects. After years of working with homeowners, I realized these two systems, velocity banking and infinite banking, were really just two halves of the same wealth engine. Phase one, accelerate. Now that you know where these two concepts came from, let's talk about how they actually fit together, because understanding the order is everything. Inside the Shred Method, we break this strategy down into three simple phases. Phase one is what we call accelerate. This is where you take control of your cash flow and start paying off debt faster than you ever thought possible. Phase two is called capture. That's where you redirect the extra cash you freed up into a private banking system that you own and control. And phase three, we call deploy. That's where your money starts working for you, funding investments and creating new streams of income, what I like to call massive, passive, permanent streams. So let's start right at the beginning with phase one, accelerate. This is where most people first experience what velocity banking really does and how the Shred Method automates it. In this phase, your income doesn't just flow into a checking account and sit there waiting to be spent. Instead, it moves through what we call a Shred account. Think of it like a smart version of a HELOC, a home equity line of credit. This is a revolving line of credit that lets your money go to work the moment it hits your account. And here's how it works. Every time your paycheck comes in, it temporarily reduces the balance on your line of credit, and that immediately lowers how much interest you owe that day. Then, as your regular bills and expenses go out, the balance rises a little again. But during that time, your money was working for you. Whatever you had sent from that account is cutting interest costs and saving you time on your loans. The Shred Method tracks all of this in real time. It looks at your income, your bills, your debts, and tells you exactly when and how much to send toward each balance. So instead of guessing how to get ahead, the algorithm that powers our software does the work for you. The result is you pay off debt years faster without earning a single extra dollar or cutting your lifestyle to the bone. Someone with a standard 30-year mortgage could pay it off in under 10 years just by using their existing income more efficiently. And that's where things start to get interesting, because once those debts are gone, you've freed up hundreds or even thousands of dollars every single month. And that freed up cash, that is the fuel for what comes next. Phase 2 is capture. Once you've created breathing room and started freeing up real cash every month, the next question is, what do you do with it? Well, most people would just let that extra money sit in a savings account, earning 0.5% of interest. But that's not building wealth. That is parking money in neutral. At best, it makes us feel secure, but with secure money, sometimes it leads to unconscious consumption. In phase 2, capture, we do something very different. We take the money that's now flowing freely from phase 1, and we move it into a place where it can grow and still stay liquid. That place is an overfunded whole life insurance policy. Now, I know when most people hear life insurance, their eyes glaze over, but this isn't your traditional policy. It is specifically designed to maximize cash value and minimize insurance costs. Here's how it works. A portion of what you pay goes toward the base insurance policy. That's what keeps the policy active. But the rest goes towards something called a paid up addition, or a PUA. Think of PUAs as turbo boosters for your policy. Every dollar you add there goes straight into your cash value, no waiting, no middleman, and it starts compounding immediately. That cash value grows every year. It earns dividends. And this is the key part. It stays liquid, which means you can borrow against it at any time without needing a bank's permission, and your money inside the policy keeps growing as if it never left. In the Shred method, we designed this step very, very intentionally. We make sure your contributions stay just below what's called the MEC limit. That's the line where your policy keeps all its tax advantages while still getting maximum growth. MEC stands for Modified Endowment Contract. Anything below the MEC limit, it is taxed and treated like an insurance policy. Anything above the MEC limit, and it starts to be viewed as an investment. Over the next 3 to 7 years, what you've built is your own personal liquidity system. And it's not just a savings account. It is a private source of capital that keeps growing and can be used anytime opportunity knocks. And this is where everything starts to click, because once you've captured your cash inside the system, the next step is to deploy it, putting those dollars into motion to create income streams that feed right back into the engine. Phase 3, deploy. Now that you've built up liquidity inside your private bank, it's time for the fun part, putting that money to work for you. And this is where phase 3 comes in, called deploy. This is where your dollars stop sitting still and start multiplying. And here is how that all plays out. Let's say that you've built $100,000 of cash value inside your policy. That may have happened over the course of 3 or 4 years. Let's say 4 years at $25,000 per year plugged into the policy. You can borrow against that money, usually at around 5% interest, and use it to invest in something that pays you more than that. Maybe it's a small rental property. It could be a short-term note, a real estate syndication, or even investing in your own business. If that investment earns 10 to 12%, you've just created arbitrage, earning more on your borrowed money that costs you to use it. Meanwhile, the $100,000 in your policy, it never stopped compounding. It's still growing as if it never left. That is the power of this phase. You're earning in 2 places at once. Now, take the income from that investment. Say it's $800 a month in rental profit, and feed it back into your Shred account. Well, that extra cash flow immediately lowers your line of credit balance, saves you more interest, and frees up even more liquidity. Do that again and again, and you've built a self-funding loop, what we call a wealth flywheel. You shred debt, you free up cash, you capture it inside your policy, you borrow from yourself to invest, and the cash flow from those investments comes right back to shred even more debt. Over time, what happens is this cycle gets faster, more efficient, and more powerful. You're not just paying off debt. You are creating an engine that keeps spinning whether you're working or not. Over time, every rotation of that loop gets faster, stronger, and more profitable. And that's the point of Infinite Banking 2.0. Not to gamble, not to chase returns, but to make your money work twice every time it moves. And that's how people using the shred method aren't just paying off debt. They're quietly building generational wealth in the background. What it takes to make this work. So by now you're probably thinking, okay, this sounds powerful, but what does it actually take to make it work? And here's the honest truth. This isn't a magic button. It is a system. It works beautifully if you follow it with consistency and intention. But first, what you must have is discretionary income. There's got to be some money left at the end of the month, not more month left at the end of your money. Even a few $100s can change the math, but there has to be something to work with to begin with. Second, you need discipline. When you start seeing extra cash flow or available credit, it can be tempting to spend it. But this isn't free money. This is fuel. It's what builds your financial future. So what our most successful shredders do is they get used to living at a certain level, call it 50 or $75 or $100,000 a year, wherever it is that you still have extra discretionary funds. Third, you need the right tools and the right guidance because not every line of credit is built the same. Not every insurance policy works for this strategy. You want products designed for flexibility, efficiency, and long-term growth. And ideally, someone who knows how to put them together. And finally, a quick but important disclaimer. This is not a get-rich-quick scheme. This is a get-rich and stay-rich plan, the kind that rewards patience and structure and time. It takes effort. Most people won't do the work, but the ones who do, they end up with liquidity, stability, and control that most people never even get close to. Because once you've seen your own numbers move in this system, once you've watched years fall off your mortgage and your cash start compounding in the background, it's hard ever to go back to traditional finance again. Listen, most people spend their lives working harder for money that barely moves. But the people who understand how to make their money move faster, they win the game quietly. That's what velocity banking and infinite banking 2.0 are really about. It's not about risk or gimmicks or chasing returns. It's all about control over your cash flow, your debt, and your future. And when you use the shred method to connect those two pieces together, you're not just following another financial strategy. You're building a system that pays off your debt faster, that creates your own bank, and funds the rest of your life on your terms. If you want to see what this looks like with your own numbers, meaning your income, your debts, your mortgage, head over to theshredmethod.com. There you'll find a savings calculator that you can plug your numbers in, and it will show you in real time what your results could be. We will show you step by step how fast your money can move when it's working for you and not against you. Because once you understand how to make your dollars move with purpose, you'll never look at a paycheck, a mortgage, or a savings account the same way again. I'm Adam Carroll. Thanks for watching. Drop a like and subscribe if you found value. Send this video to a friend that needs to see it, and I'll see you in the next one.